morning and welcome to Opening Bid. I'm Brooke DiPalma, who commuted in from a very snowy Hoboken this morning, in for Brian Sazzi this morning, who's likely using a robot to shovel his driveway out in Long Island this morning due to a winter storm that has left over 90 million Americans under warnings for extreme cold from the National Weather Service. We hope you're all safe out there, and thank you for tuning in. For now, the deep freeze extends to markets, which are a little changed this morning, moving slightly to the upside right now. But this week, well, guys, buckle up because it's going to be a very busy one. Here's what we're watching. Big tech earnings on tap as investors will get results from Microsoft, Tesla, Apple, as well as Meta. Precious metals prices are at records, with gold breaking above 5,000 on Sunday. And silver, well, it's also higher, above $100. And the FOMC is set to go into its January meeting. Now, investors are expecting for the Fed to hold rates steady. And here to break it all down is Chris Versace. He's Tematica Research Chief Investment Officer. Chris, hope you're safe. Thank you so much for joining us this morning. Really appreciate it, especially in this cold. I would like to kick things off here with Meta and Microsoft. We're expected to hear from them. What exactly do you want to hear from Microsoft when it comes to AI-related CapEx spending in order for you to feel confident here about the returns on spending?
Well, I think there's a couple things. I mean, first and foremost, we're going to want to watch their margins to see if they're starting to realize the benefits internally of adopting AI. But we're also going to want to hear about these capacity constraints, because if you remember, Brooke, that's really been one of the big things that has kind of restrained the growth that we've seen in their cloud business as they continue to add more and more capacity for both AI and data center. And with that in mind, it's really going to be paying, I would say, very, very close attention to what they have to say about their remaining performance obligations or backlog. To the extent we see this continue to climb higher, like we saw in the September quarter, I think that can give us some comfort. And it is more likely or not to be just a time between when the business that is in this big backlog number is booked as revenue as that capacity comes on stream.
Now, Chris, we're getting these results this week at a time where investors are a bit fearful about the AI bubble risk here. What differentiates here when you're set to hear from Meta? What should you be listening for in that earnings call?
Well, there too, it's going to be what is their CapEx level. But to me, when we think about Meta, there's really two things we have to focus in on. First and foremost is, what is the trend in advertising? Are they continuing to outperform the market? And remember, Brooke, they're on the cusp of really spreading that business model of advertising across Threads and WhatsApp. Tells us that they should be able to pick up more advertising dollars. But the second thing to focus in on here too is going to be their margins. We have seen them continue to lean into AI to really drive not only a better mix of advertising, but also help automate. So that could give them greater productivity. We should see that flow through their margins. That's what I'll be watching for.
Chris, anything you're listening for when it comes to that sort of backup, that reversal of their initiatives around the metaverse?
I have to say, I've always been a little skeptical about that, to the extent that they're leaning a little more into wearables with the glasses, smart glasses. I think that is smart, but I want to hear how are they going to expand that array and bring the price down so it's even more affordable, Brooke.
And when you think about another company that's in focus here, part of the Mag 7 here is Tesla. Now, many on the street are really seeing more of a longer term focus there when it comes to what we heard from Tesla CEO Elon Musk yesterday, or rather last week in Davos, around humanoid robots as well as their robo-taxis. So what will you be listening for there? And how of a long-term mindset should investors have for a company like this?
Well, I always think it's important to look, on a rolling 12 to 18 months out, but you can't ignore, the near-term hurdles. So, we have to remember that we're still coming off of the lack now of subsidies for EVs. There are going to be questions about the Cybertruck. If you remember, Musk really promised, 250,000 units. It looks like they've shipped, high single digits of that. So those are some questions. What about the competitive landscape, especially given what's happening in Canada and the bringing in of Chinese EVs? So I agree that autonomous robotics, it's out there. We'll have to see if they can get there, but near term, there are going to be some bumps along the way.
Chris, which one are you playing here? Because we did hear from Tesla bull Dan Ives. He said that he believes Tesla will own about 70% of the global autonomous market over the next decade. Once again, that long-term target. But when you think about Google's Waymo, our Yahoo Finance Brooke has just been reporting on the surge, the advantage that they're having, especially within American cities. They just seem to be ahead. So are you choosing Google or are you choosing Tesla here when it comes to these autonomous vehicle growth?
So there's a lot more players out there than just that, Brooke.
Right.
Amazon with Zoox, you've got NVIDIA with its own investments. Qualcomm is doing some investments as well, partnering with some European car manufacturers. So I would say that I think we're really early in this. When we think about, the path to fully autonomous, it's been pushed out several times. And I think that, you can spread your bets, but the reality is that today, autonomous isn't going to drive a demonstrative part of anybody's business. So I think in the near term, if it's Tesla, you got to focus in on what's happening with EVs. If it's, Google, what's going on, search, advertising, Google Cloud, and AI.
Right. So many different puts and takes when it comes to all these different companies. Another company on the radar for this week is also Apple. And you have your eye on their guidance when it comes to the price and capacity. You say that's a concern there. Walk us through how you're looking at this report.
Well, let's just back up a little bit and think about what we've heard from Micron, SanDisk, and the others about how the demand for AI and data center memory is so strong that they're shifting capacity towards that. We also know memory prices are going higher as a result. What that means is that folks have been ratcheting down their expectations in 2026 for the shipments of smartphones, PCs, tablets, and the like. And when we think about Apple, predominantly its hardware business, well, those are three big areas for them, especially for smartphones. So I do think that Apple will probably have a very good quarter when they report their December results. But it's the guidance, at least in the near term, that I think could weigh on the stock. But Brooke, there have been some developments over the weekend regarding the timing of the next gen Siri, which of course will be AI enabled, backed by Google, that could take some of the pressure off that guidance. I'm of course referring to the fact that this new revamped Siri could be shown possibly as soon as the end of February, shipping in April. And depending on how that comes across, if it delights consumers, that could start to foster the big upgrade cycle that folks have been looking for.
Yeah, Chris, Google Gemini really gaining momentum here as ChatGPT tries to keep up. Also, Apple, worth noting, it has really fallen behind the others within this space, down, or rather up only about 10% over the past year. But I do want to talk about this broadening out that we're seeing. We're seeing CoreWeave move higher this morning, and that's largely because NVIDIA invested $2 billion in CoreWeave to accelerate the build out of a more than 5 gigawatts AI factory by the year 2030. As you see this broadening out, and as you think about this investment that NVIDIA is making within CoreWeave, is that a good play right now?
We play CoreWeave indirectly in the Pro portfolio with our investment in a company called Suro Capital. They're also invested in OpenAI, Whoop, and a bunch of other companies. And I think that's my preferred way to play that because I can pick up some dividend income as well, given Suro's business development, BDC structure. But if you're not involved there, even though I think it's a better way to play it, a safer way to play it, I wouldn't chase CoreWeave here. I would much rather buy the companies like an NVIDIA, like a Broadcom, like a Marvell, that are kind of the arms merchants shipping chips to all of the rising capacity levels that we see out there.
Now, Chris, you have a lot of good picks here, but let's move to something else that we've seen because gold surpassed, first time in history, $5,000 per an ounce on Sunday afternoon. We also saw silver move higher. Now it's around $100. You say that there are other picks besides these two precious metals here.
Well, so
ways
first
to get
and
into
foremost, let me be clear. So in the Pro portfolio, we are benefiting from that with our positions in Pan American Silver, IM Gold, KGC, and one or two others. Now, are there others out there? I think you got to ask yourself, what are some of the other key metals that go into our increasingly digital world? So there could be some platinum, tantalum, for example. Probably the best way to play that, just kind of thinking off the cuff here, Brooke, maybe an ETF that has some well-rounded exposure to those various metals.
Yeah, and on top of all that, there's other factors really playing into this debasement trade that we've been seeing, this geopolitical uncertainty, also now the looming risk of a government shutdown this weekend. Do you feel as though, we heard from Brookings Institute that this sort of move in gold is a bit scary here because of all these background risks that are associating with that? Are you nervous about this rally that we've seen?
So as it relates to gold, look, it has been a rocket ship ride for gold. And I think what we've seen over the last year is, no surprise, a lot of volatility in the market, a lot of uncertainty. And I do think that we're going to continue to see that. But again, buying gold here, thinking you're going to see another 10%, 20%, it's possible, but it's also possible, Brooke, that, if we see things start to settle down, we could see gold retreat a little bit. And I think the better way to play it is kind of the way that we're positioned in the portfolio, because you can take advantage of the flow through of higher gold prices on the business model of these companies and their earnings, rather than just buying the shiny metal.
Chris, really quickly here, Fed set to meet this week. Many expect that they will not cut interest rates. Are you on that bandwagon as well?
Yes.
Any sort of implications on what we could hear from Jerome Powell?
I think Powell's going to say what he says all the time, Brooke. Yeah. The Fed's going to remain data dependent because he has to at this point. We are seeing signs that inflation is not really backing off, despite some claims from the White House. I think the big question now is, what is the outlook for the jobs market? We are hearing, and I'm sure you saw this too, Amazon's going to have more layoffs, Citi's going to have more layoffs. And as we move into the earnings season, what are other companies going to say about this as they look to, adjust their cost structure for the year ahead? I think we're going to know a lot more in the next 2 weeks.
Right, and a new Fed chair set to be announced soon. BlackRock's Rick Frieder potentially in the mix there, according to Polymarket. The odds are higher here. Chris Versace, thank you so much for taking the time this morning. Really appreciate it.
Thank you, Brooke.
Coming up, a conversation with VC legend Bill Gurley, including what investors can learn from visionary CEOs like Jensen Huang. That's next on Opening Bid. Is a bubble forming in the AI trade? It's a question that investors debated throughout all of 2025. And the conversation, well, it's still going as we head towards the second month of 2026. Venture capitalist Bill Gurley sat down with Yahoo Finance executive editor Brian Sozzi for an episode of Opening Bid Unfiltered, where he pointed out that bubbles tend to follow real waves of innovation and why this could be a crucial time for venture capital.
I think that the venture capital industry lives off of these moments. You have a book like The Innovator's Dilemma, where, or Crossing the Chasm, like these technology waves come along and they create real opportunity for companies that, just got started yesterday to take massive share from incumbents. And venture capital, without these types of disruptions, I think venture capital would be a lot harder. And so everyone gets excited. I think you've also seen in this case revenue ramp rates for some of the AI players faster than we've ever seen before in any previous wave, which is really powerful and compelling. It says that the customers are adopting the products, super quickly. At this point, however, I think like running out looking for incremental investments has gotten very complicated because the venture capital community could not be more convinced that this is the biggest wave of all time. And so, supply and demand start to even out. And so, I heard just this week about a company that did a seed at 100 pre and is doing their A for 10 million at 300 pre. So that venture investor that's doing 10 at 300 pre is getting, a tiny percent of this company relative to what people used to get. And so I just think that things have adjusted to the reality so fast that the odds of making incremental wins from here gets a lot harder.
Is that some form of indication to you that we're near some form of top for this?
It's hard. There are a lot of people that have talked about, is it a bubble or not? And I've started echoing this work from Corralado Perez, this academic, who says, when you have big waves, it attracts speculators. So real waves always have bubbles attached to them. And she goes back, 400 or 500 years. And so it's not an either or thing. It's the fact that it's real that you get speculators. And And these are opportunists that run in, and we've already seen, some types of corrections. I think the Oracle, boom bust thing happened very fast. CoreWeave stock is way off of what it used to be. We had the Rick Perry SPAC thing, data center thing that like went up and way down. So there's already been speculators that have been kind of called off a little bit. And so, I do think that there will eventually be a correction. And one of the reasons that I feel strongly about that is that so many of the players, so many of the competitors, especially the deep pocketed venture, the ones that have raised tons of venture capital, they're losing massive amounts of money, more than Uber ever lost, which was a lot. I would say.
Yes, I remember.
More than Amazon ever lost. And so the burn rates are bigger than they've ever been in the history of venture capital. And eventually they're going to want to bring those in. And when they do, like when people right now in almost every one of these categories, the leading players not pricing the cost, they're pricing to take share. And so at some point, like, and I don't know what causes that. It's just some type of exhaustion from the capital markets. These companies then have to do what Uber did, which is transition from losing money to being cash flow positive. And as they do that, the pricing for these products is going to shift. And I just feel like that's going to be a moment of a correction. There's another thing, which is if you go back to the .com period, when all these companies first started, they were all on Oracle and they were all on Sun, and they were spending, a third of the venture capital they raised on these servers that they were propping up. 5 years later, they shifted all to Linux and MySQL and open source. So you went from a period of innovation to a period of optimization where people are much more worried about cost. And I think that could happen here. I mean, I think there's some really interesting questions about the open source models versus the proprietary models, the alternative inference, architectures, like Grok, which NVIDIA just bought, but also Cerebras and some of those others. So there's those two things. I think when the startups finally have to prove unit economics, and and simultaneously we start looking for optimization, you could see some things move around.
Then are you concerned?
The Google TPU architecture as well is a competitive alternative.
Are you concerned that, I guess, OpenAI is some form of this generation's Sun Microsystems, where maybe it's not a direct comparison, but OpenAI is at the center of so many of these deals. And for them to make these deals work, they have to hit profitability at some point over the next 10 years.
Yeah, I think it's created risk for everybody that they have they've committed to so many deals in so many different places. It's almost like everyone's dependent on them surviving. And that is another thing that could lead to a correction if they ever have to start defaulting on some of those commitments. And so, we'll see. The other thing that's I think part of the reason why you've had the CoreWeave type correction, the Oracle correction, and the Rick, I don't know, I should know the name of the Rick Perry SPAC, but I don't, is...
Well, Rick Perry SPAC, it's fine. It works.
Data centers are really hard to build. And like, we already know that there's shortages of energy. Everyone's talked about it. So just the pure mental exercise of assuming that they would make it on budget, on time is probably incorrect, right? I think almost specifically going to be incorrect.
Bill, is there, you get to see so many companies early in their lifespan. Is there another Mag 7 waiting in the wings? Will there ever be another Microsoft, a Google? Are any companies catching your attention?
Well, look, I mean, I think that you have to look at what the capital markets have done, and players like Thrive and Altimeter Co. 2 and SoftBank committing to OpenAI. They clearly, like, you're not funding something at 300 billion pre, 400, 500 billion pre if you don't already believe that. So there are a lot of very proven investors who have made big bets, across multiple decades, that have already decided what you said is true about OpenAI.
How do you go about learning from greatness? That was another key topic in this. I think greatness, I'm sure a lot of people think just staying in tech, NVIDIA CEO Jensen Huang has just created this amazing companies at the center of the AI revolution. But how do you go about studying a Jensen Huang and trying to repeat some form of success that he has had?
I think the first thing I would say is, and I think this is also a great test for whether you're truly passionate about a particular job or category, is to go study the history of it and to know it all. There's a scene in the book where we uncovered there was a chess tournament where they took a break and did a trivia contest, and Magnus Carlsen won the trivia contest. So he knew more about the history of chess. If you go to the Picasso Museum in Barcelona, it's arranged chronologically, and he was a expert kind of realist at 14, which most people don't know. And I think there's an element of, and Danny did this too, I think there's just an element of knowing the history and having that as bedrock as you start to build upon what you're going to do. You're going to innovate away from that. You're not just going to mimic them. But I think that's super important. And I would also say it's highly, highly differentiating when you try and meet mentors, when you interview for jobs. Pick any job you might interview for. And let's say you're a candidate that knows more about the history of that area, and you are able to convey that in the meeting. Think how differentiating that's going to be. You signal to people that you really care and that you want to understand and that it matters to you, and that's powerful. Like, it's super powerful. So I think once you get that as a bedrock, then you go on the continuous learning journey and you build on top of that. But I think it's essential, and once again, it's near free. And here's the other thing: if you go to start doing that and it's boring to you, switch fields. Like, go do something else. If that's just not interesting to you. I haven't met a great investor who hasn't studied Warren Buffett.
Now let's take a look at all three major indices, the Dow, the S&P 500, and the NASDAQ, moving just a tad higher today, trying to hold on to some momentum here. The S&P 500 leading the way, up nearly 0.5%, followed by the NASDAQ and the Dow. But what is moving the Dow higher includes Microsoft, but mostly Meta and Apple as well. Apple moving up about 2% in these early innings of this week's trading session, as all four of these companies are set to report earnings this week. Definitely stay tuned. Tesla moving lower. But coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trending day. It's something you won't want to miss. Julie Hyman will take you there next.